Hello and welcome back to Disrupt Podcast. I'm Tom Jackson.
And I'm Gabriella Mulligan. In this fourth and final episode of our podumentary focusing on the e-commerce and retail tech space in Africa, we'll be chatting to our partners for the series, Trade Depot, OmniBiz and Marketforce, about the future of the ecosystem.
We'll hear from them about how the ecosystem is set to come under renewed interest as youth population and income growth, infrastructure improvements and increasing uptake start combining to unlock the value of the e-commerce market on the continent over the coming years.
We'll also hear what our partners are specifically focusing on as startups in the space and how they expect corporate involvement in the sector to unfold.
So let's start by asking them, what does the future of African e-commerce and retail tech look like?
The future is really exciting because the fundamentals are being built, the infrastructure continues to be built by a variety of startups. If you look at fintech, logistics, HR, which is great for talent development, all these things coming together create the right ingredients for a great future in e-commerce. Debit card payments, for example, or mobile money payments being digitized and consumers having access to this. The right infrastructure, especially on logistics and addressing, which is critical to e-commerce delivery, being ripe, then means we're going to see a surge in e-commerce adoption in the next coming years. Very high youth population as well, working to try out this new way of doing business.
That was Tesh and Babu of Kenya's Marketforce, which facilitates trade between informal retailers and consumer brands via its digital marketplace.
This sentiment is echoed by Deepankar Rustagi of Nigeria's OmniBiz, which operates an end-to-end supply chain framework. With projections suggesting the majority of Africa's retail will take place digitally within a matter of years, Deepankar says retail tech is the most important area to concentrate on.
Retail is the toughest market or is the toughest problem to solve, but is also the most important problem to solve in the coming years in the African space because of the growth in population, because of the young population, and because of the way the markets are emerging. So I would say, as the projections go, 2025, 2030, e-commerce would be a significant portion of the overall trade in Africa. And I mean B2B, B2C included. I'm not differentiating here, but a significant portion means 25 to 30% of the overall sales would be happening through e-commerce, majorly coming from B2B. That being said, with the contributions of retail tech, the experience of the consumers would evolve significantly. So purchase experience, reach of products, the inventory sizes or the catalog sizes available to the consumers in different parts of the African market would scale substantially. The amount of capital available in the trade would grow, making it a homogeneous experience irrespective of what part of the country you are in. And I think that would be great. Access to essential goods would not be a problem for anyone.
E-commerce does stand to flourish in the coming years, but it will be facilitated by Africa's network of small and informal retailers, says Kachi Izukane of Nigeria's Trade Depot, a B2B e-commerce and embedded finance platform which enables factory-to-retail distribution for consumer goods companies.
To Kachi, local retailers will be central to uptake of digital services like on-demand ordering, and they will also play a key role in access to finance in communities. As such, all discussions around growing the e-commerce and retail tech ecosystem need to revolve around these players.
We continue to see the small, informal retail operator as the center of the commerce universe. And I think this is going to be very instructive in how, the space evolves. We don't see that situation changing anytime soon. And so if this operator continues to be the center of the commerce universe, we believe there is an opportunity for a lot to be built around that. So if interventions that are focused on digitizing this operator, but also providing this operator with access, will be very defining when you look at the space several years down the road. And so today these small retail stores are the source of the most basic items that we want, usually a limited range. With digitization, you will be able to find these small operators providing consumers with access to a much broader range, some of which would be available in store, some of which could be, ordered on demand. We see these same small stores, as already happens, being also the primary touch points for access to financial services from the consumers as well, right? And today you would find a lot of these stores playing, agency banking roles where consumers can go in there and get access to cash. But, predictably, these parties could also play a key role in providing other financial services to the same consumers.
This theme is picked up by our other partners too. Deepankar stresses that there's no need to reinvent the wheel. There are established players in the retail space, so the real innovation lies in adding value to their services.
So key challenges that you need to be mindful of is we don't have to reinvent the wheel. In digitizing, in creating the retail tech, we have to see where the strength of the existing retail lies and how we can complement that with the digitization. If the focus is on complementing, we would be able to do it for a larger number of retailers and in a larger and more effective manner.
Tesh also echoes this thought. He says retail tech innovation should seek to complement and optimize rather than replace.
I think there's a massive opportunity to leverage on existing, players and add value for them through digitizing them rather than replacing them. I think there's more value to be accrued through that. So this is just to urge startups to think about, it's not always about replacing what's existing. Sometimes it's not all broken. There's this massive opportunity for optimization of what's existing rather than replacement.
So as a scaling startup in this space, looking to all the opportunities and challenges that we've been discussing, what should your focus be? How do you grow?
In retail, there are various moving parts. There are various layers. So over a period of time, retail tech startups get to become really complicated. So our focus is simplify the business and keep it real. That's what we believe would help us scale and become substantial.
Deepankar there. Over to Tesh.
How do we grow? Which is a conversation we have around M&A consolidation. Should we buy or should we build? And the reason we really lean on M&A and have completed 3 acquisitions to date is because we believe that if you accelerate the pace at which you introduce high value products for your merchants, or bring in team members who are entrepreneurs, especially localized in different geographies, understand the pain points and are able to speak the language of both buyers and sellers in that space, all these factors lead to higher chances of success.
We've established that for now, B2B has the strongest path to scale through entrepreneurs innovating in the commerce and retail landscape. But what does this increasing B2B uptake look like specifically? Here's Deepankar.
I think B2B retail tech is going to be a platform play, enabling the existing retailers who have category knowledge, who have the acumen for retail, and who are lacking the support from the tech. So strong digitized retailers offering a great experience to their customers would evolve on a platform, on a B2B retail tech platform. And I think that would create the next level of retail in Africa.
And do we expect consumer-facing e-commerce to resurge? Back to Deepankar.
Consumer-facing e-commerce would resurge would come out in a very strong way in the time to come, with a much stronger infrastructure being available for logistics and for warehousing, much stronger layer of supply partners. Consumer e-commerce would emerge in a big way. The Amazon for Africa, or the future Amazon of Africa, would work with the last mile retailers. So we feel in the retail space, every store would have a channel of e-commerce, and they would be able to manage that efficiently. They would be able to service the orders and execute that with large efficiency. I think building a strong digitized retail will open up the opportunity for consumer play, a huge market, which is the consumer play, which we jumped into directly. So building a strong digitized retail will open that opportunity, and that's going to be a super large opportunity. And not focusing on a strong infrastructure, not focusing on building a scalable infrastructure to service the existing market would hinder a big big problem in that opportunity.
Tesh thinks the consumer-facing e-commerce space will grow, but not in the globally typical manner perhaps expected. He believes social media-based commerce will be key to this segment picking up. Tesh also thinks the B2B space needs to thrive first, and any consumer-facing success will fold out of a successful B2B solution.
We're seeing surge in social e-commerce because many are realizing that e-commerce is not happening like typically the way people would think. You go onto a Amazon-like website and do your shopping. There is a lot of purchases that are happening in places where people spend most of their time. So think about Instagram and Facebook, and based on their behaviors on those platforms, then being fed with the right content, a lot of e-commerce is happening on those platforms. So that's an area I would predict a lot of activity will happen. In terms of the Amazon for Africa, I think that's likely to come out of a B2B, out of the B2B segment, and then scaling into B2C. But that's where more value will be built in the coming years in Africa.
And what about competition from incumbents in the financial and logistics space? Will startups currently gaining traction be blown away by in-house innovations from the corporate sphere?
I think we're just moving out of the phase of a lot of competition between incumbents and startups in banking, and in other segments, insurance. So I think we'll see more collaboration in the coming years. A lot of corporates have realized that building solutions in-house, they just don't have the DNA for that. And a lot of startups have realized that they need to have really well-ingrained, processes. Sometimes like licensing takes a while. So just acquiring a bank is probably easier and cheaper. So I'm excited to see the consolidation or the corporate startup partnerships that will happen, and corporates investing as well in startups rather than trying to build from scratch. I see more collaboration than competition.
That from Tesh. Deepankar has similar comments and expects investment and consolidation rather than competition from corporates.
No, I think the incumbents are going to play a very important role in the time to come. As the contribution from e-commerce increases in the overall pie, people are going to make moves. People are going to invest, or there is going to be a effort in terms of consolidation. Once people see there is a genuine large part of the market that's going to translate into e-commerce, everyone is going to make an effort in trying to own a part of that market. So there would be large investments. If you see the global market as well, even the non-tech players move to acquiring, partnering, or transitioning their businesses into becoming technology businesses. So I would say there is going to be a competition from the incumbent. I'm not sure whether how the banks are going to play a role or the existing logistics providers are going to transition themselves, but the ones who have the capacity to absorb the mindset would be in a position to create a significant change or become really competitive.
We'll leave you with some thoughts from Kachi, who says ultimately the more interest, the more activity, and the more investment going into the space from all fronts, the more likely the whole ecosystem is to evolve and succeed.
As the space develops and evolves, I think just a good indicator of how evolved the opportunity is where you begin to see more established corporates looking to get involved. I think that on its own is welcome, because for a problem this important, the more expertise and capital you have, hacking at it, the better the chances of getting to building something that works. And having said that, there are different ways parties could get involved. You could, for instance, have financial institutions, the more established ones, begin to think about having more exposure from a lending standpoint to some of these sort of operators, these sort of SME retailers, the bulk of whom they would not touch today. And this in our books will certainly be progress, right? If the market has been organized or considered organized enough, and enough visibility provided into the operations of these sort of operators for the bigger, more established corporate financial institutions looking to get involved. So this is one area, for instance, where you could see that there's a lot of work to be done when it comes to logistics, access to warehousing, even the role corporates who are manufacturers and on the supply side look to play. I think it makes sense to think about it as an ecosystem play, an ecosystem that works best, if you have more of this sort of players looking to play a role.
With that, we've come to the end of this 4-part podumentary on Africa's e-commerce and retail tech space. We hope you've enjoyed listening and found valuable insights in what you've heard.
We'd like to extend a huge thank you to our partners on this series, Trade Depot, OmniBiz and Marketforce, and we wish them well as they continue to grow as market leaders in the continent's retail tech ecosystem.
Let's talk again soon, everyone. Bye for now.
Bye.